Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast, The Week That Was. The rally in global assets resumed last week as risk sentiments improved amid weaker US macro data and less than hawkish minutes of the US FOMC meeting. However, concerns over rising COVID cases in China dented sentiments. Over the holiday-shortened week, the S&P 500 index rose 1.5% for the week and has risen in 4 of the past 6 weeks. The Dow Jones Industrial Average gained 1.8% for the week and has risen in 6 of the past 8 weeks. Back home, Indian equities gained this week on positive global cues amid less than hawkish Fed minutes and a pickup in foreign investor flows. The Nifty index started the week on a weaker note but picked up speed later in the week to end higher by 1.1%. The Nifty index scaled a new all-time high after 402 days and extended its year-to-date 2022 gains to 6.7%. Broader markets outperformed Nifty with the Nifty Midcap Index up 2.2% and the Nifty Small Cap Index up 2.5% for the week. Among sectors, IT and auto were the best performing sectors with gains of over 1.4% for the week, while utilities and realty were the worst performers with cuts of over 1% for the week. The Indian fixed income market had a fair week with bond yields falling across the curve. After rising earlier in the week, yields trended later in the week, supported by lower crude oil prices and falling US bond yields after the US FOMC minutes of the meeting revealed that Fed members remained concerned over the risks posed to the financial system due to aggressive tightening and appeared more likely to support smaller rate hikes going ahead. For the week, the 10-year Indian government bond yield fell by 1 basis point to 7.3%, while the 3-year and 5-year Indian government bond yields fell 8 basis points and 2 basis points respectively. The INR remained flat over the past week to close at 81.7 per dollar, supported by a weaker USD, falling crude oil prices, lower US bond yields, and stable foreign investor flows. During the week, the RBI's Bulletin Weekly Supplement revealed that India's total FX reserve stood at USD $547.2 billion, up USD 2.5 billion over the previous week, but still down by over USD 60 billion since the start of fiscal year 2023. With this rise, India's latest import cover improved to 9.6 months from less than 9 months in September 2022. Bank credit also grew 17% year-on-year as of 4th of November 2022. Over the coming week, all eyes will be on the release of India's GDP data. Consensus expects second quarter fiscal year 2023 GDP growth to remain strong at over 6% year-on-year, lower than the growth recorded in Q1 of fiscal year 2023. Strong macro fundamentals and robust earnings cycle has been the key reason for the resilience of Indian equities performance in 2022. Any disappointments on the growth front could keep the equity market volatility high in the coming week as Indian equities trade at expensive valuations. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.